Well, some investors thought it was smart to jump into Facebook before it went public, but in doing so, they may have gotten themselves stuck. Joe Laight, Wall Street Journal reporter here, joining us now. Joe, tell us, so we're talking about accredited investors. There are some secondary markets, of course, where they were able to buy these shares secondhand from, say, Facebook employees that wanted to get out.
Right.
And what's interesting in your stories, you mentioned that they actually may be stuck, and explain why.
So if you're going to buy shares from employees on the secondary market, you're subject to the same limitations that those employees are subject to in an IPO. So you basically can't sell for 6 months after the IPO. So all these people who bought on the secondary market, they're stuck until November. So, I mean, we've all talked about kind of this $38 issue price that Facebook was at, but some of these secondary...
Here, just to let you know, this is kind of a chart we're showing there that gives you a rough idea of what Facebook's trading looked like in advance. It's not great data to know exactly how it was, but we know the trend, right? We know it was up, and it's obviously come back off its highs.
Right, and it was trading above $40 a share, and you had to go through a huge process for the privilege of doing that, right? Facebook had to sign off on all the transactions. There's special fees associated with it, and the transactions took a couple months to close. So all these people went through this huge process, paid extra fees for the privilege of buying Facebook shares at a price that we now know is far above.
What you should be doing in that case is you should be paying really a liquidity discount. And what I mean by that is, to the extent you can't sell, you can't get liquidity, you should actually be getting a discount relative to other people, or you should be baking that into your thinking, right, when you buy the shares. And in fact, these guys ended up paying a premium because clearly some of them thought, this thing's going to the moon.
Right. I mean, it's a premium in retrospect, right?
Yeah.
So we now know that the issue price was $38 a share, and it's obviously dropped since then. But before that, there was so little liquidity in the private markets that people didn't really know where Facebook should be trading at.
Let's speaking. That's a great point, because let's ask the viewers at home: how many trades do you think were actually happening in Facebook and secondary markets, say in Q1? Think to yourself for a second. Joe, how many were there on second market?
On second market, there were 137.
137 trades. So there was really not a lot of trading. So in other words, when you're seeing that thing flash up above $40 in secondary markets before the IPO, it wasn't necessarily a great indicator that that's what the true value was.
Yeah, no, not at all. And there were far more buyers than there were sellers on the secondary market. The transactions, says 137 transactions, and the transactions themselves were relatively small. I mean, there's far more trading kind of in your average stock on the public markets. You know, a name much smaller than Facebook than there ever was in Facebook on the private markets.
What are some of the other companies that are trading on these private markets now? Of course, Facebook was really driving a lot of that trading. It was the biggest private tech company driving trading really on second market on SharesPost. Are there other stocks that really are picking up the slack?
Sure. And the secondary markets have existed for forever, right? And second market and SharesPost, they're basically trying to make this process more formal. Mm-hmm. But all the names that you think of as tech companies that you use, you know, Dropbox is on the private markets, Yelp is on the private markets, Zynga was, and Groupon was before. But none of these shares, as lightly as Facebook was traded, none of these shares are traded nearly as heavily as Facebook was.
But have valuations, you hear tell, have valuations come down pretty dramatically since Facebook's price?
They've started to. So on SharesPost, you've already seen Twitter prices drop about 15% than they did in April. But you've got to remember that even though 3 weeks feels like a long time, there might have only been 1 or 2 auctions of these companies since the Facebook IPO.
And again, not a lot of actual trades happening to give you really a robust indicator of what people think these things are worth.
Right, but in the last few months before Facebook's IPO, it accounted for more than 70% of trading on SharesPost. So now that that's gone, you've lost 70%
that's
of
another great question. Do these guys have a business? The secondary markets that are trying to put rules around this, do they have a good business going on? I know second market actually does a lot of other trading. They trade a lot of other kind of abstruse securities, fixed income securities. SharesPost, I think, was pretty much exclusively private companies and a lot of tech companies. I mean, do these guys, will they continue to exist for the long term after Facebook?
Yeah, well, I mean, so the big advantage of Facebook is it kind of shone a light on these companies, right? And so if this process happened in reverse, we wouldn't be complaining that Facebook had arrived and suddenly all these other companies were getting more volume. I think what you're seeing both of the companies do is move toward a model where companies are actually leading these liquidity windows. So second market, for example, they won't deal in companies now where, unless the company itself wants to provide a liquidity window to its employees and then sell some of these shares. So Facebook was kind of a unique example, and they let anybody who, Facebook always had to sign off, but anybody who arrived and said, I want to sell my shares, they would try to arrange some sort of transaction. So in that way, I mean, you see them kind of trying to cut their costs. I can't remember if it was SharesPost or second market, but laid off 10% of their staff leading up to the IPO. But I mean, until some of these companies grow larger, second market, until some of these companies get a bit larger, I mean, you're right, they're not seeing the same kind of volume.
Joe, I got to cut you off. Thank you very much for joining us. More on C1 Joe's story. You've obviously got a lot of people talking about who are in the stock, and some of those stories are also really great. Check out the story.